Good evening, students. Are you audible? So this is the video relating to analysis of MTP, which is applicable for CA inter examination January 2025 attempt. Okay. So before starting this analysis of this MTP, I give you some general information about this MTP. So how the marks were allocated for each and every question. Okay. First of all, exam paper is classified into two parts, section A, section B. Section A, income tax. Section B, GST. Okay. So in section A, you have two different divisions, division A, division B. Okay. Division B exclusively for MCQs. Division B descriptive part. So, and one of the important point here is division A. MCQs part having four MCQs involved in division A. The first MCQ is case scenario based MCQ. My dear student, please concentrate more on case scenario based MCQs. Very important in each and every attempt. Okay, don't neglect. So the first MCQ is a case scenario based MCQ in which three different MCQs are there. Each MCQ carries 2 marks. So 3 into 2 marks. Total 6 marks. Second MCQ also relating to case scenario. It's also having 3 different MCQs. Again carries 2 marks each MCQ. 3 into 2 marks. 6 marks. Third MCQ is an individual MCQ for 2 marks. Fourth MCQ is an individual MCQ for 1 mark. Total 15 marks. So this is all about division A, exclusive for MCQs part, having 4 different points, 4 different questions in this. First question carries 6 marks, having 3 MCQs. Second question carries 6 marks, having 3 MCQs. Third question, individual MCQ for 2 marks. Fourth question, individual MCQ for 1 mark. Total 15 marks. So it's mandatory, no choice for this. Okay. So next one, descriptive part. Division B, also having 4 different questions. Question 1 having 2 parts. Question 1 involved 2 different sub questions, A and B. 6 marks plus 4 marks. Total 10 marks. Okay. So second question also same. 6 plus 4. 10 marks. Third question also same. 6 plus 4. 10 marks. Fourth question also same. 6 plus 4. 10 marks. Okay. Total. Okay. So, and one of the important point here is that is the first question itself carrying 15 marks question from total income chapter. Sorry, the first question itself carries 15 marks. Remaining 3 questions, 2 sub questions are there. Each question carries 6 marks, 1 question, 4 marks, another question. Total 10 marks. Total 45. So division A compulsory, no choice for that. Division B, the first question is compulsory. Remaining 3 questions, you have to answer any 2 questions at your choice. Okay. So this is all about the allocation of marks. So let's begin our discussion with analysis of MTP each and every question wise. Okay. So my dear students, this is the first question, case scenario based division A, multiple choice questions, in which the first question scenario based question. This is the information given. Based on this information, you have to answer these 3 MCQs. Each MCQ carries 2 marks, total 6 marks. Okay, so I show you what they asked in each and every MCQ involved in this first question, scenario based question. So the first question, what would be the residential status? Yes, the first question related to residential status chapter, determination of residential status. Okay, so second one is income from house property, computation of income from house property based on the information given above. The third question is what amount of capital gain? So one MCQ relating to residential status, another MCQ relating to house property, another MCQ relating to capital gain. Okay, I'll explain how to answer each and every MCQ involved in case scenario. Okay, the first one is residential status. Please read carefully the information given above. Based on this information, you have to answer 3 MCQs. Okay, so first of all, Mr. Raja, an Indian citizen, age 61 years, has set up his business in Canada and residing in Canada since 2009. He owns a house property in Canada, half of which is used by his residents. So he residing in Canada since 2009. This is the very useful information for determining residential status. Again, so please verify this point. Mr. Raja visited India for every 120 days during the previous year 23-24. Before that, he visited India total 366 days during the period 2019 to 31st March 2023. Is nothing but preceding 4 years. His stay in India in aggregate 366 days. In current previous year 124 days. Is nothing but he was satisfied modified B2. So, my dear student, this is the case covered in residential status of individual exceptions. Exception 2, Indian citizen settled outside India, visit India during the current previous year. Okay, important point. Exception 2, he will be covered in exception 2. Exception 2 is having 2 parts. Part A, if his total income other than income from foreign sources, if it does not exceed 15 lakhs, need to check B1 only. If his total income other than the income from foreign sources exceed 15 lakhs, then need to verify B1 or modified B2. Of course, here he will be covered in modified B2. It's nothing but exception to part B. Okay, please go and verify the provision. Exception 2, Indian citizen settled outside India, visit India during the current previous year. During the current previous year, his stay in India is only just 124 days. So B1 not satisfied. Therefore, need to verify modified B2. Yes, modified B2 was satisfied. That is, during the current previous year. What modified B2 says that? During the current previous year, in current previous year, stay in India for at least 120 days. In preceding 4 years, at least 365 days. Yes, this condition was satisfied here. So therefore, he was satisfied, modified B2 in this case. So my dear student, one of the important point here is he was covered in exception 2, part B. Indian citizen settled outside India, visit India during the current previous year, and his total income exceed, other than income from foreign sources, exceed 15 lakhs, covered in modified B2. In modified B2, what are the conditions applicable? B1 or modified B2. Here B1 was not satisfied because his stay is less than 182 days. But modified B2 was satisfied. So he shall be treated as resident but not ordinarily resident. Because the reason is, whenever modified B2 was satisfied, that need not verify the additional conditions. He shall be directly declared as resident but not ordinarily resident. Additional conditions not applicable in this case. Okay. So the answer for this MCQ is resident but not ordinarily resident, because he was satisfied modified B2. Additional conditions not applicable here. Most important point. Have you understood? Next one is second question, income from house property. Income from house property. So what the information given here is resident but not ordinarily resident. Here need to calculate income from house property. Yeah. So my dear student, in first paragraph, he is having a house property in Canada, but this house property is not taxable in India because his status is RNOR. So RNOR not taxable if place of accrual and place of receipt both located outside India. Here this property, accrual and receipt both located outside India. Therefore, it will be taxable only to ROR, but not taxable to RNOR and NR. Therefore, ignore the Canada property located in Canada. It's not taxable in the hands of SC because here the status is RNOR. This will be taxable only to ROR because place of accrual and place of receipt both located outside India. Okay. Next one. Here another house is there in India. He purchased a flat in Delhi. Yes, place of accrual in India. Therefore, it will be taxable to all SCs irrespective of residential status. So in Delhi, the loan 34 lakhs has taken a loan from Canara Bank in India, 34 lakhs for purchase of this flat. The interest on loan is 3,40,000, and the principal is 80,000. Raja has given this flat on monthly rent of 32,500. This is the rental income since April 2023. The annual property tax is 40,000. This is the information relating to flat in Delhi. Based on this information, you have to calculate income from house property. Okay. So first of all, absence of information, actual rent itself is treated as a GAV. Minus municipal taxes 40,000. Will get NAV. After that, you have to deduct standard deduction at the rate of 30%. After that, interest on capital is there, 3,14,000. The balance is treated as income from house property. That should be the answer. I show you the computation, how to calculate it. GAV is equal to 32,500 into 12 months. Actual rent itself is treated as GAV because there is no information about paid rental value, standard rent. Okay. So 3,90,000 minus municipal taxes are there, 40,000. NAV is equal to 3,50,000 minus standard deduction 30% of NAV 1,05,000 minus interest given in the problem 3,14,000. The answer is 69,000 for Delhi property. Okay. And one more information is that he had a house property in Ranchi which was sold in May 2021. But during the current previous year, he has received arrears of rent. My dear students, arrears of rent is also taxable under the head house property. But only 70% is taxable, 30% deduction is there. So the taxable value of arrears of rent is 2,96,000 into 70% after deducting 30%. Plus standard arrears of rent 70% only, that is 2,07,000. The total is 1,38,200. That should be the answer for this MCQ. 1,38,200. Have you understood? Next one is what amount of capital gain? My dear student, capital gain, third question, capital gain. So this is the information relating to capital gain. Mr. Raja had sold 10,000 listed shares at the rate of 480 rupees each. So which acquired in 2017 100 rupees per share. STT was paid both at the time of acquisition and at the time of transfer of share. It's a section 112A case. Okay. So on 31st January 2018, the paid market value of shares is highest price, average price and lowest price. My dear students, highest price to be considered. And one more important point, this is the information which is relating to section 112A, how to calculate capital gain. This is the consideration, 480 rupees per share into number of shares, 10,000. But what the cost of acquisition here? My dear student, one of the provision is there, that is, if shares were acquired before 1/4/2000, before 1st February 2018, then compulsory you have to calculate the cost of acquisition by using a special provision. That is what the section cost of acquisition under section 112A. Here is you need to apply two steps. Step 1, consideration is equal to consideration 480. Paid market value on 31st January 2018 given here, highest paid market value, highest value to be considered. Important point, 300. Whichever is lower, 300. Step 2, amount as per step 1, 300 and actual cost. Here the shares were acquired at the rate of 100, whichever is higher, that is 300 is the cost of acquisition. That should be the main calculation in this. So now compute the capital gain. Consideration is equal to 10,000 shares into 480 rupees, 48 lakhs. Minus cost of acquisition is equal to 10,000 shares into 300, 30 lakhs, 18 lakhs. Okay. So these are the 3 MCQs relating to first case scenario questions. Have you understood? So the first MCQ B, second MCQ B, third MCQ A. Okay, let's begin the second case scenario question. So this is the second case scenario question. In this also you have to answer 3 different MCQs. First, I show you what are the MCQs need to be calculated here. The first one is chapter 6A deductions. One of the MCQ relating to chapter 6A. Second MCQ is relating to TDS. TDS related MCQ. The first one is chapter 6A related MCQ. Third one is advanced tax related, interest on advanced tax chapter related MCQ. Calculation of interest under section 234B. Okay. So I think, my dear student, this is the complicated MCQ in this MTP. Please, you have to concentrate more on this, because you need to work more to calculate this MCQ. Okay. So first of all, I give you the just information about how to calculate it. So first of all, chapter 6A deductions. Please verify what are the deductions available in this. During the previous year, salary income. Salary income is there, 1,65 lakhs. Long-term capital gain on sale of shares, 112A. STT paid, 112A, 1,06,500. Interest income from other sources and savings bank account, S80TTA available. And further, he has provided the following information. He does not receive house rent allowance, took a loan from SBI, Delhi, and paid interest 80,000 and 1,250,000 towards principal. Principal repayment housing loan eligible under section 80C. 80C deduction is there. And this is the information relating to 80D. Important calculation here. Okay. So, and he also incurred 6,400 towards preventive health checkup, also related to 80D. And his wife cash. He deposited 1 lakh towards PPF relating to 80C. And my dear student, this is the most valuable information. He has paid 5,30,000 as an advance tax. The employer has deducted tax at source of 51,89,000. It's a TDS amount. So he is of the opinion that the balance amount of is always pay on 27. Mr. Ajay shifted out of default tax regime, and so based on the above facts, case scenario given above, choose the most appropriate answer to the following questions. Okay. So this is the information given. Based on this information, you have to calculate. The first MCQ is what is the total amount of deductions and available under chapter 6A. So give you the details. The first one is what are the amounts available in 80C? 80C 1,50,000 here. Principal repayment of housing loan. Here also 80C PPF contribution 1 lakh, 2,50,000 is there. But 80C maximum deduction cannot exceed 1,50,000. Yes. Here 80C restricted to 1,50,000. 80C 1,50,000. Okay, next, most important point, 80 TTA. 80 TTA deduction available up to 10,000. 10,000. And the next one is 80D. 80D is the most important calculation here is 80D medical insurance premium for his brother. Not available because the family definition in 80D is the payment shall be made either in the name of assessee himself or spouse or dependent children and parents. Brothers and sisters not covered in this section. Not available. So parents, yes, available. Wife, available. Okay. But parents have to claim more benefit if payment was made in the name of parents. Separately claim for parents. If payment was made in the name of parents, you have to claim separately for payments. That's one of the important point. I show you how to calculate 80D. Preventive health checkup of his wife in cash. Even in cash can be deductible under section 80D. No issue. In preventive health checkup payment, irrespective of mode, you can claim deduction. But all other payments covered in 80D shall be made by any mode other than cash. Otherwise, no deduction. Okay. I show you how to calculate 80D. First, assessee parents. Medical insurance premium paid for assessee name 17,670 available. Parents 17,670. Parents. Self and wife 21,000. Okay. Second one, preventive health checkup of his wife. Preventive health checkup contribution cannot exceed 5,000. So therefore, total deduction is 26,000 here, but restricted to 25,000 only. But here is, you can claim 17,670. Total 42,670. 42,670 is the deduction under section 80T. Please go and verify the deduction carefully. Most important. Okay. So 80D. 46,670. 42,000. Yeah. 25,000 plus 17,670. 42,670. So total chapter 6 year deduction here is 2,02,670. Have you understood? That should be the answer for this MCQ. And my dear students, I'll give you one more information here is NPS Tier 1 account, Tier 2 account information given here. Actually, Tier 2 account is available only to government employees. But here the employee is not a government employee. Therefore, Tier 1, Tier 2 account payment is not eligible for deduction. And Tier 1 account payment eligible under section 80 CCD 1B. But he has not taken into account this payment while calculating chapter 6 deduction. I think in my opinion, an alternative answer for this is if you add this 50,000 to aggregate amount of chapter 6A, you can get the answer of 2,52,670 also. But he was not considered this amount of NPS contribution Tier 1 account. Okay. So even if you have even if you have considered this amount as 80 CCD 1B, your answer will be 2,52,670. That should be also the correct answer. Okay. But I think why it has not considered here is he has taken into account aggregate limit under section 80 CCE, overall limit under section 80C. What 80 CCE says that aggregate amount of deduction under section 80C, 80 CCD, 80 CCC, 80 CCD subsection 1 cannot exceed 1,50,000. If this amount has taken into account in 80 CCD 1, then that should not be allowed as deduction because the limit was already crossed. 80C itself exceed 1,50,000. Therefore, you have not available to 80 CCC, 80 CCD 1 here. I think that's why he has not considered this amount of Tier 1 account payment. Actually, Tier 1 account payment is also eligible for deduction under section 80 CCD 1B. Even if this amount has taken into account, then your answer will be 2,52,670. So option C. That should also be a correct answer. Okay. Next, TDS related. So my dear student, assuming that the purpose he has paid a rent of 60,000 per month, 65,000 per month rent paid, is there any TDS obligations? So my dear student, there are two sections for TDS, 194I, 194IB. Okay. So, but here the assessee is a salaried employee. So that's why TDS provisions not applicable under section 194I. What section 194I says that in this section, the TDS shall be made by any person other than individual whose turnover in preceding year does not exceed 1 crore or 50 lakhs in case of professional person. But here the assessee is a salaried class of employee. It's nothing but no turnover is there to assessee in preceding previous year. Therefore, 194I does not attracted here. Therefore, need to apply 194IB. What section 194IB says that? If per month rent exceed 50,000, then you have to deduct TDS under section 194IB. Okay, at the rate of 5%. So what is the TDS amount here? 65,000 per month into 12 months into 5%. 39,000 is the TDS amount at the rate of 5%. Have you understood? Next, third MCQ is advance tax payment. Is he required to pay interest under section 234B? My dear students, please verify. It's a time consuming MCQ. I give you the details about how to calculate. First of all, need to calculate interest under section 234B. Okay. How to calculate 234B interest? First, calculate the total income and calculate the tax liability, including surcharge and education cess. After that, reduce the TDS amount. So after that, 90% of tax liability, compare the advance tax already paid with 90% of tax liability you got. Then identify is there any shortfall on which you are liable to pay interest. If there is no shortfall, then no need to pay interest. Okay. So, but I give you the details how to calculate. Please verify later. In this problem, there are 4 heads involved. First head is salary income is there, 1 crore 65 lakhs. So earned salary. So you are required to deduct the standard deduction from this amount. Therefore, salary income is equal to 1 crore 64 lakhs 50,000. So after deducting standard deduction. Next, income from house property. Yeah. So income from house property is there in this problem. Second paragraph, he does not receive any house rent allowance. Took a loan from State Bank of India for repairing his house property self-occupied. Yes, self-occupied house is there. Therefore, what is the format for self-occupied? NAV shall be taken as nil minus only one deduction, that is interest. Interest is deductible. So interest on such house property is 80,000, but the house was taken for repairs. Therefore, maximum deduction of interest cannot exceed 30,000, restricted to 30,000. Therefore, the resulting house property income is minus 30,000. Okay. Next one is long-term capital gain. Given in the problem directly in first paragraph itself, long-term capital gain 1,06,500, but STT paid, it's a 112A capital gain. However, 112A capital gain is having an exemption of up to 1 lakh. Balance is only taxable. So taxable value is 1,06,500 minus 1 lakh. 6,500 only, just 6,500 minus the exemption of 1 lakh. The balance is only to be taken into account. Have you understood? And the next one is income from other sources, interest income directly given in the problem, 4,82,778. Income from other sources, 4,82,778. The gross total income is 1 crore 69 lakhs 9,280. After that, reduce chapter 6A deductions. It was already calculated in first MCQ. 2,02,000, 2,02,670, 2,02,670. Okay. The net income is 1,67,000, 1,67,06,610. After that, calculate the tax liability, including surcharge and education cess. Including surcharge and education cess as per the slab rates. Okay. I don't want to calculate the tax liability. I give you direct answer. Tax liability including surcharge and education cess is 57,70,081. After that, reduce the TDS amount. 51,89,000. It was given in the problem. 51,81,000. The balance amount is 5,81,081. So the balance tax liability. So you have to pay at least 90% from this amount to the government. So if you have paid at least 90% of this amount, then no need to pay any interest under section 234B. Otherwise, you have to pay interest under section 234B on shortfall amount. But now calculate the 90% of this amount. 90% of 5,81,081 is equal to 5,22,973. But please verify the problem. What the amount of advance tax actually paid? 5,30,000 given in this problem. 5,30,000 is the advance tax actually paid. Minus advance tax actually paid 5,30,000. So what the amount required to be paid? 5,22,973. Here actual payment of advance tax is 5,30,000. Therefore, the payment is more than the required payment. Actual payment is more than the required payment. Therefore, shortfall amount nil. Therefore, no need to pay any interest under section 234B. Nil. Okay, have you understood? This is the computation procedure. It's a time consuming. Please go and verify clearly. So the answer for this MCQ is nil. Okay. And the last two MCQs. Gift from his father friend on the same day, the amount is deposited on a fixed deposit in Priya's bank account. On the said deposit, interest 13,000 was earned. In whose hands the income of Priya shall be taxable. Also compute the amount of income that shall be taxable in both parents. It's a clubbing provision. Clubbing related. Okay, it's a minor children. Minor children gets a gift of 20 lakhs from her father's friend. So during the current previous year itself, therefore this amount is to be clubbed in the hands of parents. Okay. And on the same day, the amount deposited in a fixed deposit in Priya's bank account. On the said deposit, interest 13,000 was earned during the previous year 23-24. On this amount, the assessee earned 13,000 interest. Therefore, total income of assessee is 20 lakhs 13,000. So in whose hands the income is Priya shall be taxable. So in whose hands it will be clubbed? What section 64(1)A says that the minor's income is to be clubbed in the hands of either of the parents whose total income is greater, either mother or father, whose total income is greater. But before clubbing, you have to claim an exemption of 1,500 rupees. You have to claim an exemption of 1,500 rupees under section 1032. But this exemption is not available under default tax regime. So therefore, here need to calculate. Here need to answer this MCQ under default tax regime. Therefore, don't claim exemption of 1,500. You have to club total amount in the hands of parents. Okay, entire 20 lakhs 13,000 to be clubbed. That should be the answer. 20 lakhs 13,000 shall be taxable in the hands of Priya's father or mother whose total income is higher. That should be the answer. Have you understood? And the last one is Rohit, resident Indian, has incurred 15,000 medical treatment of his dependent father, who is a person with disability, and his deposit 20 lakhs LIC is nothing but 80 DD. It's a chapter 6 deduction. Default tax regime. Rohit would be eligible for deduction under section 80 DD. Okay. So is it severe or normal? If it is normal disability, 75,000. If it is severe, 1,25,000. If no information is there about the disability, therefore you can claim 75,000 as deduction. No issue. So, but here there is a specific information that severe disability. Therefore, the answer is 1,25,000. So, let's begin division B. It's a computation descriptive part. Okay. And my dear students, for all these questions, you have solutions also. Therefore, you have to verify it carefully with reference to the solution. I don't want to explain fully and clear explanation because it's totally time consuming. Okay. So, but there is no explanations for MCQs. That's why I explained each and MCQ separately. Okay. So, this is the total income problem, 15 marks. Total income problem, 15 marks. I'll give you explanation only just. My dear student, total income is most important. There is no option this problem. Compulsory, you have to answer this question. There is no choice. Okay. So, first one is he received a royalty income from other sources. Income from other sources. Abroad books authored by him in the nature of artistic. The rate of royalty is 18%. Royalty income eligible under section 80. Royalty income, royalty related to books. Eligible under section income from other sources plus 80 QQB also. 80 QQB available. And one more important, maximum rate cannot exceed 15% while claiming 80 QQB. I'll give you the calculation, just wait. The value of books and expenditure, the expenditure is 40,000. While taxability of this royalty income under the head other sources, you have to deduct this expenditure compulsory. Okay. First of all, I'll give you the answer. Income from other sources. Royalty income is equal to 2,88,000 minus expenditure 40,000. 2,88,000 minus 40,000. 2,48,000. Okay. This income to be included in income from other sources. But how to calculate 80 QQB? 80 QQB is equal to what section 80 QQB says that most important point. How to calculate 80 QQB? Most important point. Please verify the point carefully. So 18% royalty has received. Actual amount of royalty 2,88,000. And out of that royalty received abroad, there is a condition in section 80 QQB. If royalty received abroad, royalty brought into India within 6 months or such extended period is only eligible for deduction. So here 2,30,000 only brought into India. Okay. So I show you how to calculate 80 QQB. Step 1, actual amount of royalty 2,88,000. Okay. So actually 18% of royalty was taken for that 2,88,000. And the statutory limit, another limit is 15%, cannot exceed 15%. So 2,88,000. 2,40,000. And amount brought into India 2,30,000. Whichever is lower. 2,30,000. This is the eligible payment minus expenses 40,000. Therefore 1,90,000. This is the amount as per step 1. Now calculate step 2. Amount as per step 1 is equal to 1,90,000. There is a statutory limit in 80 QQB. Maximum deduction cannot exceed 3 lakhs. Statutory limit 3 lakhs. Whichever is lower, 1,90,000. This is all about section 80 QQB. Have you understood? Next. So, industrial and special economic zone related point. Generally 10 EIA exemption deduction is available to sales units. But there is a condition. Date of commencement of manufacturing activity in special economic zone. So, on or before 31st March 2020 is only eligible for deduction under section 10 EIA. But here the manufacturing operations started in 21-22. The last date for claiming exemption, the last year for claiming exemption is 1920. 5/6 to 1920. If you anybody started any unit in special economic zone in between 5/6 to 1920 are only eligible for 10 AA. But here is 10 AA not available here, because date of commencement condition was not satisfied. That should be the important point here is. So that from this unit, what was the amount acquired profit from this industry is 20 lakhs. You have to take this amount as PGBP income. Don't claim 10 AA. Entire amount is taxable under the head PGBP, 20 lakhs. Okay. Next one is, it's a capital gain related information. Here 30% of equity shares. Associate is holding 30% of equity shares. The company is having 2 lakhs shares. Out of that 30%, 60,000 shares. Associate held 60,000 shares out of 2 lakh shares. You have to calculate capital gain for 60,000 shares. This is the sale consideration. The sale consideration is 60 per share. Cost of acquisition is 10 per share with a premium of 30. Total cost of acquisition 40 per share. Actual cost 40 per share. Consideration 60 per share. 31/1/2018 50 per share. Same here also 112A gets attracted. Need to calculate cost of acquisition by using special provision which was calculated in MCQ. Step 1, step 2. Okay, here also you should apply the same procedure. Okay, because 112A cost of acquisition, step 1, consideration or paid market value on 31st January 2018, whichever is lower. Amount as per step 1 or actual cost 40 rupees, whichever is higher to be considered. The same calculation to be applicable here also. Have you understood? Next one is savings bank interest, income from other sources. 80 TTA deduction also available. If associate is a senior citizen, then 80 TTB available. But here associate age is just 45 years. TTA available. Okay. So this is house property related information. Associate is having 2 floors. Ground floor is first floor let out. Self-occupied floor of his residential building and has let out first floor. Part of the building self-occupied, part of the building let out. Annual rent is 2,28,000. That's the easy calculation, house property head. Okay. Next, he paid insurance premium of 39,000, life insurance policy of son who is not dependent upon him. Yes, LIC premium of son eligible under section 80C. But on the life insurance policy of dependent father not eligible under section 80C. Because the family definition in 80C is spouse, children. Parents not covered, brothers and sisters not covered. Therefore, only 39,000 is only eligible for 80C. Next, tuition fee 42,000 eligible under section 80C. The fee is being 14,000 per children. Total 14,000 per children, 3 children. You have to claim only 2 children as deduction. There is a condition in 80C. Maximum deduction cannot exceed 2 children. So 2 into 14,000 is only to be claimed as deduction. That is 28,000. 80C 28,000. So this is all about the information relating to total income. Have you understood? So please go and verify the printed solution with reference to the problem. So I think these are the main points. Next, second question is residential status question. Residential status, Mrs. Ria, age 62 years, was born and brought up in New Delhi. She got married in Russia in 1996 and settled there. Since then, since her marriage, she visits India for 60 days each year, summer. So actually here also the associate settled outside India. In every year he visits India, just stay in India 60 days each and every year. So that no doubt here also the associate covered in exception 2. Exception 2. Exception 2. Indian citizen settled outside India visit India during the current previous year. Exception 2 is having 2 parts. Part A, need to check B1. Part B, need to check B1 or modified B2. Okay, here even if she was covered in part A, B1 need to be satisfied. B1 says that required to be stay in India for at least 182 days. But here actual stay is 60 days, therefore not satisfied. If she was covered in part B, here also need to check B1 or modified B2. B1 says that required number of days is 182 days. Modified B2 says that required number of days during the current year is 120 days. So, but here actual stay is 60 days only. Therefore, both the conditions were not satisfied. Therefore, she will be treated as a non-resident here. Okay. So, here assessee is a non-resident. Based on the status of non-resident, you have to answer the following incomes, whether it is taxable or not. Have you understood? The first one is pension received from Russian government. Accrual outside India, receipt outside India. Therefore, not taxable. Okay. Next, long-term capital gain on sale of land at New Delhi, taxable in India. Short-term capital gain on sale of shares of an Indian company, listed Indian company, therefore taxable in India because place of accrual in India. And premium paid for self-Russian life insurance company. It's an ATC deduction, but not available here because need to answer this question under default tax regime. No Chapter 6 year deductions except 80CCD2, 80CCH2, 80JJAA. Except these three sections, no other deduction is available under default tax regime. Therefore, not available. Rent received in respect of house in Delhi, yes, taxable, but only 70% taxable because standard deduction is there at the rate of 30%. Have you understood? So this is the answer for this question. Next question, part B. So it's an advanced tax related question. Two fundamental questions. The same question is there in your material. Please go and verify. Okay. So advanced tax estimated tax liability is 80,000. TDS amount 12,000. After deducting TDS amount 68,000. This 68,000 shall be payable on installment basis, quarterly installments. June 15th. At least 15% out of 68,000. September 15th, 45%, including previous amount. December 15th, 75%, including previous amounts. Okay. So, March 15th, 100%. You have to settle 100%. This is two fundamental problem. You have to pay this amount in 4 installments in the different parts. 15%, first quarter, 45%, 75%, 100%. Okay. Please go and verify the printed solution relating to this question. Okay. It's the two fundamental problems. Same problem is there in your material, including amounts also. Next one. So this is the depreciation calculation. Depreciation calculation, it's a two fundamental. First open the block and then calculate the depreciation. First to opening WD, you have to take opening WDV, let's add purchases minus sale. After that, we'll get amount. On this, you have to calculate depreciation. Have you understood? So this is depreciation calculation problem. It's a two fundamental problem. Here opening WDV given 7,70,000. So bought purchases 6,10,000. Sale 10 lakhs. The balance amount is eligible for depreciation. While calculating depreciation, the asset purchased here is December 23. Therefore, it's less than 180 days. Therefore, eligible only for half depreciation. That should be the important point. You have to calculate the depreciation on asset purchased during the current previous year is only half, that is 7.5%. Asset in opening WDV eligible for full rate. Okay. So that should be the main calculation here. Next one. And 3 different questions are there in. First is computation of depreciation under section 32. Simple calculation. Second one is capital gain. Capital gain. No capital gain will arise for same previous year because section 32 was applied. Whenever the block was still in existence, then section 32 gets attracted. No, section 50 gets at 50. Section 50 does not attracted whenever section 32 was applied. Whenever the block becomes closed, then only section 50 gets attracted, then need to calculate capital gain. Same previous year. So both the sections are not applicable at the same time. Okay. So first of all, here section 32 was applied. So no capital gain will arise because the block still in existence. Therefore, need to calculate depreciation under section 32. Therefore, the question of capital gain does not arise in this. Okay, important point. And last one is deduction under section 35. It's a scientific research expenditure. The details given above. 2 different payments were made. University approved 15 lakhs. Sachivati College 17 lakhs. No deduction for this. Deduction is available for 15 lakhs because there is no approval for this. There is no information about it was approved. Therefore, you have to claim deduction only to first payment, that is 15 lakhs into 100%. Have you understood? Next, this is the capital gain related problem. Capital gain related problem. So it's also too lengthy but simple problem. So please verify it carefully. Bought 80 lakhs. The asset was purchased for 80 lakhs. At the time of purchase, registration expenses was incurred 10%. Therefore, cost of acquisition at the time of registration incurred at the time of purchase will be added to the cost. 80 lakhs plus 10%. 88 lakhs. This is the cost of acquisition. And one more important, the land was purchased in March 2005. That is 4.5. But the building was constructed in 6.7. That is, you have to calculate the indexation separately for land and building because it was acquired 2 different years. Land purchased in 4.5, building constructed in 6.7. That's the important observation here. Next, entered into an agreement for sale above said residential house, but the sale consideration is 600 lakhs. But the stamp duty value is 620 lakhs on the date of agreement. But the stamp duty value on the date of registration is 670 lakhs. What section 50C says that? If stamp duty value on the date of agreement and the date of registration are not the same, then on the date of agreement to be considered subject to fulfillment of certain conditions. Otherwise, on the date of registration to be considered. Okay, please go and verify. So, Asif received 20 lakhs advance in cash. Here, stamp duty value on the date of agreement is 620 lakhs. Stamp duty value on the date of registration is 670 lakhs. Which value to be considered? Actual consideration is 600 lakhs. So here what section 50C says that stamp duty value on the date of agreement to be considered subject to some conditions. The conditions are, one of the condition is consideration must be received either fully or partly. Yes, here 20 lakhs was received in advance. One of the conditions satisfied. And the date of received on or before the date of agreement. Yes, here the advance received on the date of agreement. Second condition was also satisfied. But mode of receipt, account pay check, account pay bank draft, electronic clearing system. But here the advance was received in cash. One of the condition was violated. Therefore, stamp duty value on the date of agreement not to be considered. Registration related stamp duty value to be considered. Then compare the actual consideration. Stamp duty value exceed 110% of actual consideration. Therefore, stamp duty value to be considered as consideration. Yeah, this is the very important point in this. Now consideration is 670 lakhs because it exceed 110% of actual consideration. What was the actual consideration? 600 lakhs into 110%, 660 lakhs. But stamp duty value is 670 lakhs. Okay. Cost of acquisition given in first paragraph. Land cost 88 lakhs, building cost 100 lakhs. Based on that information, you have to calculate the capital gain. And one more important, after that he invested in bonds. National Highway Authority of India, total 45 lakhs and 15 lakhs. Total 60 lakhs investment was made, but out of that maximum investment cannot exceed 54 EC 50 lakhs. 54 EC section is available here. 54 EC exemption available, but eligible investment under 54 EC is maximum 50 lakhs. Okay, that should be that. And the next one is set off and carry forward. It's the most fundamental problem. So many of problems are there in our material. Please go and verify. Okay. So in this, the last point is something new. That is the income of minor daughter. The minor daughter earned this income from special talent. Therefore, not eligible for clubbing. Just ignore it. That's the new point. Except that remaining information is too fundamental. And this is the return of income related problem. Return of income. It's a 3D question. In case of non-filing of return of income, what will be the consequences to face by assessee? It's a purely 3D question. Same question is there in our material, I think in assignment. Please go and verify. I think it's the first problem of assignment. So need to pay interest. So many of, and need to pay fee also. Best judgment assess. So many of consequences you have to face if return was not filed. Okay. It's a purely theory question from return of income chapter. And the last one is also return of income chapter relating to PAN quoting cases. Okay, there are 4 cases in which PAN required to be quoted or not. The first one is payment of life insurance premium 40,000. So there is a threshold limit of 50,000 for quoting the PAN for life insurance premium. Here the amount is 40,000, therefore not required to quote PAN. Okay, so please verify the answer with reference to the question. It's a too easy question, fundamental question. Payment 1,10,000 RBI for acquiring its bonds. Okay, PAN related question, and these are the 4 cases not required. First case, because threshold limit 50,000 is there in that, but here is exceed 50,000, therefore required to be quote PAN number guarantee compulsory. Next one is yes, third one, because the third case is applied issue of credit card compulsory, you need to quote PAN number compulsory. There is no threshold limit for this, compulsory you have to quote PAN number. And the last question is payment was made in check, therefore no need to quote PAN number here. So if payment was made in cash, then only threshold limit applicable. Please go and verify the last point, very important in this. Last point is very important. Payment exceed 1 lakh by account to pay check to travel agent. So no, need not quote PAN number since the payment was made by account to pay check. If it was paid in cash, then compulsory quote PAN number, mandatory. Okay, so these are the questions involved in this MTP. At least before going to examination, compulsory at least prepared once whatever the questions involved in MTP mandatorily. Okay, so this is all about MTP, which is applicable to January 2025 attempt for CA Inter. Okay, so all the best to all of you. Thank you.